The Morgan Report with David Morgan.
David Morgan with you, themorganreport.com. Well, let's talk about the stock market. Stocks are mixed and the Dow's trading in near record territory. NASDAQ's been weaker, usually leads both up and down. Tech stocks are vulnerable. And of course, the big news isn't the stock market. The big news, of course, is the bond market. And as I am doing this video with about 2 hours left in the markets, the 10-year yield has again pushed over 1.6%. Whether the TNX, the 10-year, will get up to 2% as it has in the past, I would say absolutely. Would it see some resistance there? Yes, looking at the chart, it would. But nonetheless, the bond market really is the key, the debt markets, and they are having issues. Bond yields go up, bond prices come down. So we are, of course, watching this closely, as are everybody that's really tuned in to how the financial system works or doesn't work. And looking at the metals, as you can see, again, 2 hours left in this market, we have, as I'm doing this on Friday, everybody is up slightly. Gold basically flat at 40 cents. Silver's off 24 cents at this time. Platinum is basically flat, and palladium is up almost 1%. And going back to what I said a moment ago about the debt or credit markets being the problem, this is off of goldsilver.com, Mike Maloney's website. And the first one up on news is George Gammon. Haven't really said much about George. I have followed him for quite some time. And he does a great job, uses a whiteboard in most of his presentations. Really just gets right down to it and does it. He does a good job, a very good job. So this is basically something that you would probably hear Peter Schiff say more than anybody else in this genre, that you can't solve a debt problem with more debt. But this is one that's worth looking at, especially if you're new. And even if you're not, it's a good review. So a shout out to George. So a little backup on what I'm saying. Really, I've said it over and over, and I'll get to it at the end of this video, what I said in the Silver Manifesto on the back cover page. But this is from Kimball Charting Solutions. Government bond bear market about to get worse, says Joe Friday. It's a 2-minute read. You can take a look at the chart, and you can see, again, we've got this cup. Will we have a handle? Yes, probably, but if interest rates continue going up and away, then that's goodbye bond market. And I'm being a bit facetious, but really it's a huge problem. The debt problem can't be solved. And if you don't want $1 today, why would you want one 2 years from now, or 30 days from now, or 7 years from now? So we'll see as things continue down this, kicking the can down the road. I think we're running out of road. And we're going to see a lot more here. As he says here, Joe Friday, just the facts. Breakout here would be painful for bonds. And you can see the level, hopefully with my cursor here, that this cup formation, once we get above that, start getting that 2% or so that we talked about a second ago, and break that level, then, wow, no telling what will happen. There'll be a lot of commentary. And to further the case, this is from Zero Hedge, of course. Even the banks are bailing now. Dealers dump record amount of treasuries. And, of course, who's the buyer of last resort? Well, the central bank, of course, which means the Fed. When the Fed buys bonds, it monetizes it, which means it goes to cash. It may stay sterile, may just be digits, may just be a computer transfer, but nonetheless, it goes from being a instrument that can be converted into dollars, into that instrument being cashed into dollars and then going somewhere. Even if it's held in a bank account, it's monetized. Interesting article. This is realinvestmentadvice.com, written by Lance Roberts. The macro view. Yellen's go big modern money theory plan may disappoint. If you haven't heard about it, MMT is gaining traction by economists and politicians from both sides that of the aisle as the economic prescription, even panacea to cure all economic ills. In other words, just print money until heck won't have it. No problem, no worries, nothing to see here. Move on. Pretty good article, does a good job here. It's probably a 5-minute read. Believe me, printing a lot of something makes it worth less and worth less and worth less until it's worthless. Another great article from the Foundation for Economic Education. I actually contribute to them. I think they do a good job. Federal COVID spending just hit $41,870 per taxpayer. Did you see that much benefit? Brad Plumbo goes on to talk about Biden just signed the $1.9 trillion spending into law, which will be a huge relief, quote unquote. It's roughly estimated it comes out to $41,870 per federal taxpayer. Do you see anywhere near that much in benefit? Good question. The sheer immensity of this spending is hard to grasp. For context, $6 trillion is more than 1/4 of what the U.S. economy produces in an entire year. The COVID spending blowout is at least 8 times bigger than the inflation-adjusted price tag of the New Deal from Roosevelt. Moreover, the COVID spending bills have lost huge sums of money to unrelated carve-outs, political pet projects, corporate bailouts, and fraud, waste, and abuse. So, very interesting. You can read the rest of the article. It's definitely worth a read. Anything from Fee is pretty good. I don't agree with every single thing, but on balance, it's a very good outfit, in my view. And a quick look at the silver stocks from the COMEX. And, of course, these are all the approved COMEX vaults, warehouses. And if we focus on the register, which is the dealer inventory, we'll see at this point in time, we're at about 127.8 million ounces of fine silver held collectively in the register category from these various dealers. This was at about, round numbers, 20 million ounces higher, probably a month and a half ago. I used to print these out every day. I don't bother anymore. I think this overall number is slightly less. Most of it's probably stayed on the COMEX and just moved from registered into eligible, which generally speaking is long-term strong hands. But there's movement. In fact, that's a rather substantive movement for, I'm going to guess, 6 weeks, maybe even less. It was 20 million out of 140. It's, 15, 16% in, let's say, roughly a month's time. So will it continue or not remains to be determined. It seems that the demand is staying strong, at least on the retail side. And there's mixed messages on the commercial bar side. I've heard just a few say there is no markup. Most I have talked to are, in the 20, 30 cent range if you just remove the medallion and change it. In other words, you just keep the bar where it is and change ownership that little bit. And then, of course, there's a different number if you are going to actually offload it off of the COMEX, and that would be somewhere in the 85 to dollar even higher range, because it's a different animal. You're not just moving the receipt on who owns it or moving the category. You are actually coming in and transporting it. So there's that. And a quick look at the Commitment of Traders report. This is as of the 2nd of March, as you can see. And you can see that the commercial interests, which are basically the banks, which we talk about always, have actually changed. They changed their short position by 11,000 contracts, which is pretty substantive. However, if we do the quick arithmetic of 105,000 contracts short and only roughly 46,000 long, the net there is about 65,000 contracts, which is still a huge short position. Come over to the other side, the non-commercial, basically the trading funds over here. And what you see for the net change through that date was longs, they offed 3,785 contracts. Short, they added contracts, which is typical actually, but a long ways to go. The open interest here, 158,000 contracts, which is still quite substantive. It's rather large. I've seen it larger, but this is a number that is not a resolved number where the shorts have basically covered the positions they want to start the game over again. And just diving a bit deeper here on the commitment of traders. This is from Nick's site, and it's more update than what I just showed you. I might have been on a cash version, I'm not sure. But if you look here closely, on the commercial side, you're looking at 60,000 contracts, round numbers, on the commercial short side, and you're looking at about 40,000 contracts. On the net net trading fund side, and the public's in the mix. So we are at a level that's, getting better for, you might say, for the shorts. What I look for is basically these type of levels here on the absolute level, not necessarily the price, where you're like 40,000, 50,000 net short commercial wise, and up to 40, 30 on the trading fund side. So you're in these levels here where you see the prices come down, where I'm indicating with my marker red on red. It's hard to see. And so we're not there yet. We got a ways to go, but it's moving in their favor, so to speak. As I showed you a moment ago, they're able to cover 11,000 contracts. And according to Nick's chart here, it looks like another 5,000 or so would be my guess. However, physical does trump paper at some point in time, and we are seeing a lot of demand, as I said a moment ago. So this is meaningful, but you can't just base all of your ideas about the silver market on this paper market. Thought I'd take a quick look at the point and figure chart. You can look it up on the internet. Very few people use it. It's actually quite helpful. You can see here from September-ish that we're generally in an uptrend in the silver market. And what's interesting is if you erase that, what you see is as the market goes higher, you get these green ups, and as it goes lower every day, you have to plot it on the price of it, and it's going down as red. So you can see on the recent run-up, we saw it go in late February from roughly 25.5 all the way up to almost 30. Then we had the big sell-off, then it rallied up, and now it's coming down, now it's starting to rally again. But if you look at that in recent time, it did something similar before. It went up quite a bit, then down, and then a little sideways, and it got short. We're seeing that here. So what I'm trying to point out here is that silver can come out of nowhere. Like these kind of actions where it's kind of boring, and all of a sudden you get this big shoot up, and then this little bit of sell-off and this big shoot up. And we've already been up to this level once. Back in August of last year, we saw it again end of February of this year. Usually it takes 3 tries and you're through, which implies the next time we're up toward the $30 level on the continuous contract, it could go through. And if that were to happen, you probably could see 32, 33 pretty quickly. There's not a lot of resistance for silver above 30, so it can move easily because everyone that owns it pretty much would be holding it at a profit. Even with these outrageous premiums, I think a lot of people are paying 30, 32, 33 for a coin when the price is like 25, 26, 27. Regardless, the chart doesn't look bad. This point and figure actually looks encouraging. And I think I'll say a few more words and close out. Okay, a little self-promotion here. This is the website for the Silver Manifesto. We do not sell on Amazon anymore. Amazon does sell used copies, usually for, depends when you look, 65, 70. I actually had a guy that paid over 200 for one, which unfortunately he didn't buy it off of this website. So just want to go through a little bit of what I wrote on the back of the cover of this book. Silver has been money throughout history, and the U.S. was founded on a silver standard. The authors explore when to expect the next bull market to begin and why. How the 2008 financial crisis has been papered over and what to watch for going forward. the real supply and demand, looking at both industrial and monetary demand, money and banking, what fractional reserve banking means to currency and bullion, how to pick a mining company. This information is priceless. Most who are taught this methodology have a degree in finance, but we break it down for the average investor. The silver manipulation story, the facts, more facts, and the irrefutable facts. And last but not least, the biggest concern of all investors, the debt bomb. So I'll be back with you next week. Enjoy your weekend. David Morgan, themorganreport.com.